Hey everyone, welcome back to Corporate Decoder, the place where we'll decode the hidden messages in those thick corporate documents so you don't have to. Today we're diving into GameSquare Holdings Incorporated's latest report. Buckle up, because this one has some shareholder drama and a surprise vote outcome. Before we get into the nitty gritty, if you like getting clear, no nonsense breakdowns of company filings, do us a favor and hit that subscribe button. Also, we've got a fantastic community over on Discord where we chat all things corporate finance. You can join through the link in the description. Alright, let's cut to the chase. GameSquare Holdings Incorporated, a company that is involved in things like esports and marketing, has just filed their report. You know, the official paperwork that companies have to send to the government to tell everyone what is going on. This filing is about a recent meeting of their shareholders, which is basically where the owners of the company get together to vote on important stuff. The earliest event reported here happened on the 4th of December 2025. Now, this report highlights an interesting situation. It seems at first they didn't have enough people show up, either in person or by sending in their votes beforehand, to officially make decisions. This is called not having a quorum. But they got a court in Delaware to step in and say, okay, technically you do have enough people for the meeting to happen. It is like if a club meeting didn't have enough members, but the president went to the principal to say, can we still have the meeting? A bit of a drama to get things rolling. Scrolling through, we see they're reporting on the proceedings of their annual shareholder meeting. This is where shareholders get to voice their say on how the company is run. They had a bunch of proposals to vote on, which are essentially ideas or plans that management wants approved by the owners. Looking at what is traded on the stock market, their common stock is listed on the Nasdaq, traded under the ticker symbol game. This is how everyday investors can buy and sell shares of the company. Interestingly, GameSquare has checked the box saying they are an emerging growth company. This means they are a relatively new company and get some benefits like being able to delay adopting certain new accounting rules. It signals they are still in a growth phase. Now, let's get to the heart of the meeting. They presented several proposals, but the big story here is how they went. First off, they elected 2 directors to their board. These are the people who oversee the company's strategy and management. Both nominees got the thumbs up from shareholders, so they will be serving 3-year terms. It is worth noting that one director, Nick Lewin, was not reappointed and has left the board. But here is where things get spicy. Most of the other proposals sailed through smoothly. However, Proposal 4, which was about approving a merger agreement, it failed. This means the shareholders voted no on a significant deal that would have restructured the company and increased the number of shares they can issue. This is a pretty big deal because it signals a disagreement between management's plans and what the owners want. Let's look at the numbers for the director elections. For Thomas Walker, there were over 40 million votes for and a little over 1 million votes withheld. Travis Goff also saw similar support with over 40 million votes for and about 1.2 million votes withheld. This shows pretty solid backing for the board nominees. Then there is Proposal 2, ratifying their choice of Creston GTA as their independent auditor. This is like the company's accountant. Over 40 million votes were for this, and only about 2 million were against. So shareholders are fine with who is checking their books. Proposal 3 was an advisory vote on executive compensation. Think of it as shareholders giving their opinion on how much the top brass is paid. Here we see about 37.2 million votes for and around 4.3 million votes against. It passed, but with a notable number of dissenters, which suggests some shareholders might feel the pay is a bit too high. And finally, the big one, Proposal 4, the merger agreement. This is the one that failed. We see about 37.5 million votes for, but a substantial 5 million votes against. This is the most interesting part of the voting. When a significant reorganization like a merger agreement doesn't get the green light, it raises questions about the company's strategy and potentially management's ability to get their key initiatives approved. The fact that it failed despite management presenting it means that a significant portion of shareholders, almost 12% of the total votes cast or about 5 million shares, were not convinced this was the right move for the company. Because shareholders approved it, they've decided to have this advisory vote on executive pay every year. And for the record, they've included the usual exhibits, including the interactive data file for the cover page. Finally, the report is signed off by Justin Kenner, the Chief Executive Officer and a Director on the 5th of December 2025. This is the stamp of approval from the top. So what is the story here? GameSquare held its shareholder meeting, but it wasn't without some turbulence. The fact that they needed court intervention to even hold the meeting suggests there might have been some internal divisions or challenges in getting shareholders engaged. While they successfully elected directors and ratified their auditor, the failure of Proposal 4, the merger agreement, is a significant red flag. It indicates a disconnect between what management wants to do and what a substantial chunk of the company's owners believe is best. This could signal future strategic challenges or a need for management to better align with shareholder interests if they want their major initiatives to pass. It's a clear sign that not all the elephants in the room were addressed by management's proposals, and shareholders were vocal about it. A key risk here is that this failure might signal a broader lack of confidence in the company's future direction from its owners, potentially impacting its ability to secure financing or execute future growth plans. While the director election shows stability, the failed merger vote points to potential strategic misalignment. Ultimately, GameSquare needs to address this shareholder dissent to move forward effectively. Alright, that is our deep dive into GameSquare Holdings Incorporated's latest filing. What is your take on this shareholder meeting outcome, especially that failed merger vote, and what do you think it means for the company's future? Let us know your thoughts in the comments below. If you found this breakdown helpful, please smash that like button, it really helps us out, and subscribe for more corporate insights. And don't forget to join our Discord community for more in-depth discussions. The link is in the description. Thanks for watching, and we'll see you in the next one.